All right, traders, it is the 3rd of May 2017. My name is Jameson. Welcome to Behringer Trading. We are looking at Global Blood Therapeutics, GBT. I shared this chart very informally yesterday. There's a few things that I like about it. These are the charts that I look for. I spend a lot of time looking for these. This looks like accumulation, and its current price action is retrospectively confirming the bias that this is accumulation. So with Wyckoff methodology, there's 4 phases. There's 4 phases. There's accumulation, there's markup, distribution, and a markdown. And the stock that we're looking at here, GBT, appears to be under accumulation. And within each of the phases of accumulation and distribution, there's 5 other phases. They have it broken down into phase A, B, C, and D. And what we can appreciate here for the accumulation phase is that, we have this climactic selling that's present. And I had previously measured the bearish price objective. And the bearish price objective, if I recall, is around $20. So I know ahead of time that the bearish price objective has been met. The downward follow through should be limited. And that kind of gets me interested in following a stock and speculating on a long position. Now what we have here is we have a selling climax, and we have a couple different levels. So you want to try to find a level of preliminary support. Where in this descent did prices stall? So we have kind of a preliminary support here, and then we have another one here. So we kind of have a primary, or we have a kind of a minor level and a major level that are kind of being tested, because essentially somebody's taking the risks. Insiders know, somebody is interested in accumulating Global Blood Therapeutics. And the only way they know whether they control enough of the overhead supply is for them to buy weakness and then allow it to go through a series of tests and retests. And during these descents, they can kind of shake the trees and see how many leaves fall. So what we have is I'm going to say that this is our preliminary support. We have a selling climax. And then we have a minor automatic reaction and then secondary tests. So this is kind of an informal stopping action that we have here. So that concludes phase A. On a major scale, we have a preliminary support, stopping action. This is our automatic reaction, and I believe this would be our secondary tests. So now even more confidently, I would say we have a stopping action to this decline that's present. But what we have here, on this decline, you can appreciate there was a lot of weak hands. There's a lot of volume that presented. So you can speculate that any rally that's going to happen, it's going to be sold. I mean, this isn't just going to rally and go up. And that's what happened. So we had a lot of supply that presented, and we go through a series of tests and retests, and each of these shakes, you can see little spikes in volume. There's still weak hands that's here. And it's not until the point where it tests and it violates this level, there's no more weak hands. You can appreciate that there's a small increase in volume, but this increase in volume is actually demand. It's associated with this small vertical bar, this daily session here that resulted in prices breaking back in within this range. So there's no weak hands that's here. And then there's a secondary tests of this spring or this shakeout that's here, and there's no one interested here. At this point, we've transitioned from a stopping action to testing the stopping action, and this is the absorption of supply. This last test is called the final test of supply. Let's keep things simple. And now, when the longs finally have confidence that they control the majority of the shares of this stock, of Global Blood Therapeutics, they buy it, they trigger it. And then as it goes up, obviously the public, the retail traders, they see the volume. It goes off in their, on their scans. And it gains interest. And as it gains interest, it gains momentum, and the volume increases. And the volume increases because these guys who have been purchasing the risk and holding this trade are selling in the profits. But I don't think this is over. So ideally, the best point of an entry is the best entry book answer for Wyckoff methodology is the purchase on the terminal shakeout, which is a very emotional place to purchase a trade. Heck, if you look at Haynes brand right now, it just dropped. I'll have to look at that a little later on today, but that kind of looks like a terminal shakeout. TWLO, that might be a terminal shakeout, but I guarantee you a lot of traders are very emotional about that drop. But we may find out that it actually rallies away from there because each of those equities have been under accumulation. That's the whole point of the shakeout, is to scare all the weak hands out. The idea is to recognize what's going on and don't expose your capital until you see the terminal shakeout. But man, that's a lot easier said than done. It takes a lot of discipline. And the only thing that I have found is that don't hit home runs. Don't expose a lot of capital. Understand that it's not far enough, or it's not mature enough of a trade to expose a lot of capital. And while we're speculating, trying to trade support and resistance in here, I advocate keeping positions small. So don't try to hit home runs through these little areas. Take a 25% position, take your $250 or $500 or $1,000. Be content with it and keep hitting these base hits. Otherwise, you expose too much capital, you get emotional, you get stressed, you get in a fight with your spouse, and it shakes you out, and you lose confidence. You lose confidence and you don't take trades that you should trade. You got to remember this is just a process. But what we have here is, I think this is our terminal shakeout. And now we're kind of breaking through this level of resistance. And Wyckoff caused this level of resistance a creek. So this would be our minor creek, and this would be our major creek. And the character at which that we break through this resistance would be a jump across the creek. We have, these are all, we're trading higher with increased ease of vertical movement. Prices are closing near highs, volumes expanding, and then we delay right here through resistance. And mechanically, the reason that we stall here is because these guys here, these bag holders, they obviously want to break even. So they're selling, they're closing their trade so they can, again, break even. We have these guys that are profit taking. You probably had some shorts that were here. But if we measure the move, the measure amount of time in consolidation here, we get a price target of $55. So I'm interested in this trade for a couple reasons. We have enough cause to speculate that the trade is not exhausted. I don't believe this is our buying climax, okay? I think that there's more left in this trade. The next thing I find attractive is that we're maintaining 50% retracement of this up move. So that means that this is still in a position of bullish technical strength. And the next thing is that we're currently building more cause. So the amount of consolidation that we presently have will support a price objective of $36. So again, from a risk reward standpoint, our risk would be maybe 6%. So in other words, you just have to draw a line in the sand somewhere. It would appear as though we're buying support, and we have some measured objectives that would give us, reward. So we can identify that there's an adequate risk reward ratio to expose capital that's here. So I would advocate maybe taking, 25 to 30% of a position, or even 50% of a position. But I wouldn't expose all my capital, because if prices were to dip down, you automatically take a 6% loss, because truly this could potentially drop back down to 200-day moving average. And that's not the end of the world. That's the ideal position. I would love for this to come down to $22 and for me to say, guys, this is where you want to enter. So really, I think the risk reward supports taking the risk, looking for trades between $28 and $31. And if it drops 6% on half your position, it's only a 3% loss. Cut your losses. Look to buy the dip. But meanwhile, if you have some capital exposed and it actually breaks higher, and then it drops again, and we confirm this prior level of resistance as support, then you can increase your exposure. You can buy 25% more. And then you can expose more capital as it breaks up through levels of resistance, and you buy support. And then you can hold this trade speculating that we actually achieved this $55 price objective. So I like this trade. I think it's going to take some maturity to try to get a trade entry around here. But this is a legitimate setup. These are the trades that I'm looking forward. I really appreciate you guys' patience. The website should be up in about a week or so. I definitely want some feedback, some ideas. But this is what we're looking for. Have a good evening and good luck.